mobile money will represent a $405 billion worth of opportunity by the year 2025, according to global forecast. The technology is, among other things, bringing disruption to the payments industry to the extent of facilitating diaspora remittances to Kenya and other parts of Africa. Let's take a look.
A study by the Central Bank of Kenya shows that more than 90% of retail transactions in parts of Kenya are cash-based. This is in spite the country being a model for innovation in payments and money transfer, especially through mobile money.
Kenya is the utopia. I mean, we've got M-Pesa, which we all know is absolutely incredible. We have digital financial inclusion here. Everybody has an M-Pesa account. We've probably got one of the best microfinance banks in the world, Equity Bank. The rest of the world is striving to become like Kenya. And all I'm saying is, I don't see us halting this tide. I see a tidal wave of poverty coming towards us, and we're doing little interventions which are trying to push that tidal wave back.
In terms of attacking cash, this is clearly a journey. The most advanced economies in the world, if I look at the US, they're at about 48% now cashless transactions. The UK, with an enormous long time and very deep penetration of financial services, the tap and go that they've launched in that market are now only sitting at 52%. So I'm not at all surprised that we're further behind, but the indicators we're seeing are huge.
Experts attribute the huge penetration gap to the sluggish adoption of technology into the payments culture in the country. However, Safaricom's M-Pesa, which is the market leader, has more than 19 million users, transacting an estimated 15 billion shillings daily.
The one way that we see of deepening financial inclusion and digitizing the economy is really encouraging more of the low-income customers to enter this digital space. 6 months ago, we announced what we call M-Pesa Kidogo, where we reduced the transaction fee for transactions for less than 100 shillings. Today, we'd like to announce, thanks to the Financial Times giving us the opportunity, we'd like to announce that we are increasing that threshold from 100 to 200 shillings. In other words, all transactions, person to person, Leap and M-Pesa, and paybill below 200 shillings will be free.
Commercial banks have also ventured into the payments and money transfer services via the mobile phone. In July 2015, Kenya's largest bank by customer numbers, Equity Bank, unveiled a telecommunications arm whose main aim was to facilitate mobile payments. As of December 2016, the value of mobile transactions had risen by 318% to 382 billion shillings, garnering a 20% market share in the country's mobile money transfer market.
I would agree fully. We haven't got the luxury anymore of excluding the majority of the population from digital financial services. It's a basic human right. Everybody should have access to digital financial services, and that's predominantly payments. So yes, I would agree very much. I would not want to be a financial services company involved purely in payments, because I think it's going to become increasingly difficult to make money out of it.
The adaptability of mobile money in the country has also seen penetration of the same into collection of government revenue, agriculture, health and insurance financing, and processing of diaspora remittances.
We know that 2 out of 5 Kenyans who need healthcare services are not going to seek that treatment simply because they don't have the money to do so. Nearly half of all healthcare expenditure are paid out of pocket, and that's a serious issue. It means that half Kenyans have no health insurance of any form to pay for basic healthcare. The burden is most often carried by low-income Kenyans, with poor mothers and children being particularly vulnerable. Over 25 million Kenyans today are able to access a mobile phone. And the device has the capability to extend the reach of services that would not traditionally be available to many Kenyans. M-TIBA allows our customers to set aside funds that can only be used for healthcare needs.
We need to be thinking about packaging insurance with other digital financial services. So if I'm, for example, taking a loan to educate my child, why can't I, as a provider, or I as a customer demand that I'm given some form of packaging that means if I do fall off my motorbike and have to take 2 weeks off work, the school fees can be covered. That type of need meeting is how insurance will grow.
Going forward, challenges in the mobile payments industry remain in enabling interoperability of systems and driving down the cost of making payments.
Payments are a facilitator of financial solutions for the underserved, and payments will therefore in due course become free. Now that makes it very difficult if you are a pure payments player, which I think Bob was emphasizing. Now they're into farming, education, etc. And that is my belief, it's the way it's going to go. People are prepared to pay for services that bring value to them or improve or transform their lives. Payments doesn't do that. It is just the mechanism to enable them to have access to that. So those will become free, and we will have to set other services at a cost that is appropriate